Welcome to SOFI Wednesday. Today we're going to talk about the daily chart and the weekly chart. For SOFI, we're going to look at the long dated and short dated options on this one. We'll talk a little bit about my price targets, my ads and trims, what I'm going to do long term with it. And also we'll touch on a little bit of SOFI news that's out recently and a quick look at the general market overview. So that'll be the economic data yesterday and what's coming out today. Alrighty, so SOFI has been an absolute banger since kind of August. So from the low, we've got to the peak an absolute monster rally of 170% over 78 trading days. I've rotated in and out of this a few times with quite a lot of my position. Currently now I'm sitting at a 10%. Primarily that's because we got to my $15 fair value for this one, so I don't like to be overweight when I'm at that fair value. Each quarter the fair value might change and I might feel a bit more comfortable going overweight in it again, but for right now I'm happy with my position on this one. We'll talk a little bit about my price targets and I've updated my models after I've gone through the chart here with you. So I did trim a little bit, not much. I was enjoying this rally. It looked like it wanted to kind of stop. I always like to take a little bit of risk off when we have these very large moves intraday. Normally we can see a little bit of a pullback or hesitation on there, so I'm happy that I took the trims off there. And then we had the rejection from this historic level, so I took a little trim off there, a little bit more. I thought it's getting very extended now. We're going to get a pullback. We did get a pullback, but not to the level where I would want to start adding shares back. So from the kind of 7%, to me it wasn't really worth adding any risk back, especially where it was relating to my fair value on that one. And now we're just kind of making a new volume shelf here. I don't know if it's going to hold. I suspect we're going to chop around a little bit. We've been overheated on the RSI for a while. Flow is looking really tired. MACDX Plus still looks great. We're not getting any oversold or overbought alarms, which is great. We're just kind of ticking along there. So we're getting a couple of exhaustion signs. Volumes started to drop off, but prices held on really strong. Really, really impressed. I would love to see more SOFI news coming out. We'll talk about some interesting nuggets in the news section, but mainly this price I think is being pumped up with Trump winning and regulation being a little bit easier for banks and stuff. Because as much as people like to say SOFI isn't a bank, it still moves with banks, so that's important to remember. Levels to the upside on this one, if I just pull this down a little bit, kind of 18's the next really strong level that I would be looking at to take any more profits. But that's quite an additional move there. That would be a 17% move. So pretty big to the downside though. Again, we could back test this 1455 level. I wouldn't add more back here. 1359 would be a good back test level. I might add more back there actually because my fair value did actually lift up. And I'm definitely buying more if we ever got back down to 1235. We can see my predictive price action got absolutely blown out. The Trump pump was real on this one. But so my valuation now, I've extended my range on it a little bit. So my price target for next year is kind of $21. That said, my kind of fair value for this current quarter in now sits at $16. So we're right up there. We've hit that level. So I don't want to be over 10% waiting because we're kind of in that fair value right now. Given the numbers that the company's put up, I don't want to go overweight in that. $21. Let's have a quick look at how much upside that would give us for next year. So about 35% up from here. Is that something I'm super excited about? For a long-term hold, yes. However, I don't want to add to this because there's other stuff that I think could go up more than 100% in 2025. So I'm not going to want to put capital here when I've already got a large position, when I'm going to want to build out the smaller positions that have got higher potential returns, and they're also on sale right now. So I'm sitting on very little cash. I couldn't really add to this one even if I wanted to. In fact, in one of my other portfolios, I've started to trim out of SOFI and PayPal and rotate into MicroStrategy, which I think a lot of people are probably amused about since I did time the top very well on that one. And I'm getting a very sweet discount right now to buy more of that. So we've talked about everything I wanted to touch on. My current portfolio is just over 10% weighting. It's 10.76, which is great. That falls in my range. I don't really have any plans to trim out anymore unless we had an insane move up. On the weekly chart, again, we're getting very spicy on the RSI. I would love a pullback here to drop us maybe down to a 9% weighting, and I would maybe add a bit more. It depends, like we talked about, where the price drops to. I wouldn't really want to add more until it got at least under 14.09, I don't think, because then the trims would be a little bit pointless, and I don't really like doing that, especially if I'm at quite a large position anyway. MACDX Plus looks excellent. Whales are gobbling that up, and flow looks pretty strong on here. So we could go higher or at least hold this range, but I think I'd like to see this one fade a little bit, have a little bit of a relax, especially we're about halfway through to earnings now. Well, not even that, so we've got plenty of time. I'd like to see us cool off. Maybe we get some really big news up towards earnings. That'd be great. So open options interest on this one. We can see perfectly the $16 level there. The volume there looks pretty decent, so that's going to be hard to break over, which kind of aligns with what we're thinking fair price wise, and also that unless something big news wise comes out, it's going to be hard for us to break over that. To the downside, this 1250 level should be amazing support, but also it's going to be fairly tough to even drop below 15, so probably wouldn't add at those levels, but definitely be adding down here. And we did actually close that gap, so I mean $5, I don't know what that support's doing down there. That seems a bit out of left field. I would absolutely rip someone's arm off to be able to buy this at $5 again, but I don't see that happening. Pushing out a week. Again, huge volume here as well, guys. This is going to be a real tough level at 16 to break, unless there's some really great news coming out, something probably to do with the banking as an AWS service. Could happen, but I haven't heard anything or seen any hints of anything. If nothing exciting comes out, I imagine this one's probably going to fade a little bit. Let's just go to January. So the market does look like it wants to move things up towards the end of the year a little bit here. We're getting a lot of support underneath at 1550. Yeah, it's exciting to see something grind up pretty consistently. But I would like to see that initial drop happen where we just pull back a little bit and then push up to these highs so I can scale in, because everyone wants more money, right? January 2026 then. Let's see what the market's thinking, the big boys, the toots. So, I mean, it's fairly in line with what I'm thinking fair price wise, so looks like a lot of people are looking that way. I mean, my fair price on this one could change dramatically as each quarter comes out, because they keep beating their guidance, and one big deal could change things massively for this company in regards to their fintech business. So something to bear in mind. 21 fair price might not be around for too long. The company has a way of just executing, but I don't see these prices ever happening again unless there's some kind of catastrophic banking failure that has huge contagion, which shouldn't happen at this point. I say should, but I definitely don't see a bubble in the banking sector. But I'm not really an expert. So news-wise on this one, not loads of news. We did have the US Direct Express and US Treasury deal kind of coming out. I mean, it says nearly 3.4 Americans rely on blah de blah, but it's actually, we only get part of that deal. It's not for the full lot, so the member growth from that should be impactful, but not like game changing. But this is exciting, and I can't help but start to think it's been so long since they've been hinting, working with one of the top banks in regards to their fintech business, that I get the feeling something's coming soon. It's time, guys. I'm ready. But other than that, though, Charles Schwab, I hate that word, Schwab. It sounds horrible. talking about wanting to go into crypto once regulations change. I'd like to see SOFI come out with something similar, just hinting that they want to. That should give us a good pumpy pump, and I would take more off the table in that scenario, because it's going to be a while before the regulation actually does change and allows them to get involved. Other than that, a while ago, it's been a while since I actually made a SOFA video, so I didn't account for the robo-advisor platform. It's not going to be the most impactful thing. It's just a nice little perk to talk about, something to draw customers in. I mean, the algorithms are pretty simple, and it's normally ETF-related recommendations. I don't have SOFI, so I can't really comment on the specifics of that. So if anyone does, feel free to let me know. But normally, robo-advisors are kind of more aimed at passive investing. Helps people feel a bit like they're getting the most bang for their buck, but it's still normally passive. It's not going to be active. Market data from yesterday. Let's have a quick look. Anything exciting? Building permits. Nah. Dumpster fire. Red book. That's okay. House price index. Oh, that's weird. And that's normally represented not with a percentage, but I think there's a bug there, so I don't actually know what it was. It's showing as a dip. Oh well, not that I imagine it was good. House price index month over month was actually improved, which is interesting. So people want more dollar. Consumer confidence has picked up nicely again. New home sales is down. New home sales month over month down. So mixed bag, but nothing really exciting. Manufacturing had a dump again. We kind of expect that. We don't expect it really anything great in the short term. Obviously, Trump's long-term plan is to bring manufacturing back to the US. So, but that's going to take time. That's not going to be something where you can just click your fingers and massive factories just pop out of thin air. Services, though, is looking good. That's really what drives the US economy right now. So it's good to see some strength there. That looks amazing. That is a very nice bullish trend in the Dallas Fed Services Index. M2 supply looking good. Liquidity, baby, we love it. FOMC minutes. I didn't actually listen to those because I was playing Xbox with my partner. But I did look quickly at the market, and things didn't look like they closed very strong yesterday. So I'm guessing the market didn't like those. Side note, if anyone knows any good 2-player games on Xbox, hit me up, because we've almost completed Legendary on all the 2-player games and running out of things to play together. Today's data, we've got more mortgage data. Probably not going to expecting anything great on those mortgage numbers. Core PCE, I know the market's going to probably react quite strongly to this when we get it in a little while. It's going to be out before the market opens, and currently the market is pumping after the sell-off yesterday. So it's going to be interesting to see what these numbers come in at. Obviously, we've got this short Turkey week this week for US, so I wouldn't expect too much in the grand scheme of upside with the low volume, but the moves can still be quite wild with low volume. Don't want to restart. Sorry, I just got a pop-up on my screen asking me to reboot, which is very inconvenient. More jobs data through the day as well. A lot of this data is coming out very early, so I'm going to try and be available pre-market to see this data and have a little look through it. Nothing else too interesting. Nothing on Thursday. Friday, Fed balance sheet, always worth having a look, see what the runoff's going to be, and then we're on to next week. So fairly big data day today, but I don't know if it's going to be massively market moving, given the volume's going to be quite low overall. But yeah, we can see. That's a wrap. Hope you like this. I've been trying to make the videos shorter, more concise, get the information out a little bit faster. Tell me if you like it. Tell me if you don't. But share this regardless, and subscribe to the channel. And I'll see you tomorrow for tomorrow's update for PayPal.